welcome to today's episode. I'm Joanna Machado, co-founder of Dream Homes Investment, and I'm delighted to be joined by my co-host and co-founder of Dream Homes Investment, Ravinder Singh Johal. Hi, Ravi.
Hi, Joanna. Looking forward to another exciting podcast with Dream Homes Investment.
Yes, and our special guest today is Eleni Busoli from Londonist, which is a real estate agency specializing in selling property in Greece. Hello, Eleni, welcome, and thank you so much for joining us today.
Hello, everyone. I'm happy to be here. Thank you very much for your invitation.
Right. In today's conversation, we're going to be exploring the opportunities within the Greek real estate market, what's driving international interest, and what buyers and investors should know when looking beyond their home markets, and how to navigate cross-border real estate with confidence. Eleni, before we dive in to our conversation about the Greek real estate market, could you tell us about yourself and about Londonist?
Yes, sure, Joanna. Thank you. My name is Eleni Busoli, as you said. I'm working at Londonist Investments in Greece. I am a Golden Visa sales expert. I have a sales and representative role, marketing specialist in Londonist. Londonist is an international company with offices in London, Istanbul, Shanghai, and Greece. Aims to meet the customers with the right real estate investment. We help international investors explore the market in Greece and find the best options that meet their needs and advise them on purchasing process. Our mission is to provide our clients with a rich variety of properties that are affordable, sustainable, and profitable, and to establish a lasting relationship based on trust, reliability, and honesty.
Sounds good. Thank you very much for that introduction. So let's start with the why now factor. Eleni, with the global economy shifting, what specific market trends make Greece a more attractive investment destination right now comparing to other European hotspots like Spain or like Portugal?
While Spain and Portugal are maturing and showing signs of market fatigue, Greece is currently in a high growth sweet spot. Unlike its peers, Greece real estate prices only recently surpasses their 2008 peaks, meaning there are still significant catch-up potential. Furthermore, with Portugal has effectively removed real estate from its Golden Visa program, Greece has maintained it simply refining the tiers to ensure sustainable development. This makes Greece the primary gateway for investors seeking both a capital growth play and then an European residency permit through tangible assets.
Thank you very much, Eleni. Moving on to the lifestyle return on investment. Beyond the financial returns, how are you seeing the lifestyle investment trend evolve? Are buyers looking for holiday rentals, or is there a shift towards long-term residency and remote work basis?
Right now in Greece, we are witnessing a massive transition from holiday homes to second-base residencies. Okay. The rise of the digital nomad and the 2026 expansion of luxury infrastructure like the Ellinikon project we have now in the Athenian Riviera means buyers aren't just looking for 2-week summer rentals. They want year-round viability, high-speed fiber internet, and new co-working hubs in Athens and Crete are driving a shift towards long-term residency, where the return on investment is measured in quality of life, climate, and a lower cost of living relative to the Northern Europe.
And have you seen much in the way of shifts, certainly in the last 6 to 12 months?
Yes, we did regarding the change policy of the Golden Visa as well. In the last year, we have seen that we have witnessing that transition.
I would like to ask you about the Golden Visa evolution. There have been significant changes to the Golden Visa residency program recently. So how have these adjustments changed the strategy for international investors, and where are the sweet spots?
The new Golden Visa, the evolution of the Golden Visa, the new tier system has turned the program into a strategic treasure hunt with the 800,000 euros limited in prime zones like Central Athens, Mykonos, Thessaloniki. Investors are looking for a trophy asset. However, the real sweet spot for this year is the 250,000 euros commercial to residential route. This allows savvy investors to pick up an undervalued commercial sales in prime city locations, convert them into luxury lofts, and secure residency at a fraction of the prime zone cost. It's no longer about just buying an apartment; it's about a smart urban regeneration.
Moving on from there, talking about emerging neighborhoods, we know about investing in Athens and Mykonos, etc. But what other regions or islands are Londonists currently excited about for high capital appreciation over the next 5 years?
Beyond the big names, as you mentioned, London is particularly excited about Syros and Naxos. Syros as the administrative capital of the Kyklades, which is part of also of, as you know, Santorini Mykonos, offers a
Yeah.
year-round economy that Mykonos lacks, make it safer for long-term yields. On the mainland, the Athens Riviera, Glyfada up to Vouliagmeni, remains the gold standard, but we see incredible appreciation potential in Piraeus. Piraeus, it's the biggest port in Greece, in Athens, which is undergoing a massive transformation with new metro links and waterfront redevelopments.
Let's talk about the relative value and yield, because the average property prices in Athens is around 2,000 euros per square meter. And that remains significantly lower than some other places like Lisbon or Madrid, where the prices can even exceed 4,000 euros per square meter. How would you say these lower entry costs combined with rental yields of nearly 7% in prime areas, how do they create a better returns than established markets like France or Malta?
Indeed, the numbers speak for themselves. Even with the recent price hikes, Athens remains nearly by 50% cheaper per square meter than Lisbon or Madrid. When you combine a lower entry price with rental yields that can be 5 to 7% in regenerating districts, the yield play is far superior to France or Malta, where high entry costs often compress yields to the 2 or 3% range. In Greece, you aren't just buying a capital growth, you're buying a high performing income stream.
Yeah, great. Return on investment and lower prices. It's all very attractive from an investor's point of view.
Yeah, absolutely. And just sticking to the narrative, comparing Greece to Malta, Spain, Portugal, or France. With Malta, we've seen buyers have seen it as a more viable option due to offering permanent residency program. But it requires high costs, such as non-refundable donations and so on. So what makes Greece property-based model a more attractive long-term asset for investors who want to retain their principal capital?
Indeed, Malta's model often involves sunk costs, money you never see again. Greece's model is built on a private ownership. Your capital is tied to a deeded physical asset in your name. If the market rises 20% over 5 years, that gain is yours. Investor in 2026 prefer the Greek model because it's often a dual exit. You can eventually sell the property, likely at a profit, while having enjoying years of residency, whereas a donation it's one-way street.
Very interesting, very good point. You mentioned briefly about the permanent residency golden visa. Greece operates a tiered system. So you've got the prime zones like Mykonos and Central Athens, which require 800,000 euros investment, and then special 250,000 euros commercial to residential route is also available. So how would you say investors should navigate these tiers to find the best balance between lifestyle, returns, and residency?
Navigating the tiers requires a mixed-use mindset. If your goal is a lifestyle, the 800,000 tier in the southern suburb of Athens provides the best amenity access. However, for those focused on the residency and the yield, the 250 commercial conversions is the most efficient. The route is particularly popular with investors who want to keep capital liquid for other ventures while securing their plan B in the European Union.
I see.
That's really good for, yeah, just versatile in terms of investors who have more money to invest as opposed to those who have a specific budget, and there's something for everyone pretty much.
And moving on from there, we're going to just briefly touch upon tax and inheritance reforms, where I understand that Greece is introducing significant inheritance reforms in 2026 by maintaining a favorable non-dom tax regime. How do these structural changes position Greece as a generational wealth destination compared to other EU countries that we've mentioned already in this podcast, which have more volatile tax policies?
Sure, Greece has become a generational wealth fortress. The non-dom regime allows for a flat tax of 100,000 euros on worldwide income, regardless of the amount, which is a massive draw to high net worth individuals. More importantly, assets held outside of Greece by non-dom residents are often exempt from inheritance tax. In an era where many European nations are looking to hike taxes on the wealthy, Greece is offering a 15-year guarantee of fiscal stability, make it in one of the most secure places to anchor a family legacy.
Thank you very much to participating in this wonderful podcast talking about Greece, which appears to me offers depth, diversity, and resilience. And with the right strategy, it sounds like it could be one of the more smarter long-term investments in Europe compared to some of the other countries that we mentioned in this podcast. Just to round things off, Eleni, could we just summarize why Greece would be a more attractive investment?
Greece has transitioned into a stable investment grade economy that is currently outperforming much of the Eurozone. The investment landscape is defined by high growth sectors and a favorable regulatory environment, also benefits from non-European investors. The key points are the high growth in Greece, a residency that is owned as long as you have a property, you have owned a residency in Greece,
Mm-hmm.
and also you can benefit from the high growth between the tourism in Greece. And Greece has fundamentally shifted its economy narrative in 2026. It's no longer viewed as a recovery market, but as a stable investment grade growth engine of the Mediterranean.
Mm.
Mm-hmm.
And certainly for some of our investors based in the Middle East and the Far East as well, why would Greece look more of a viable option to invest in compared to some of the other countries that we've mentioned?
For an investor from the Middle East, Greece in 2026 is increasingly viewed as a safe harbor and a strategic getaway that offers a unique combination of European stability and Mediterranean proximity.
Residents
Yeah.
as well.
Mhm.
Yeah, I would imagine that would be quite important, especially given the current geopolitical climate. Eleni, thank you very much.
Well, Eleni, thank you so much. I mean, we've discussed the different ways of investing in real estate in Greece, different reasons, from tax benefits to golden visas, attractive prices of the properties, and of course the lifestyle and the climate. Just wanted to say thank you so much for joining our conversation, and it's been wonderful speaking to you. And thank you all for watching. If you're considering overseas property investment in Greece, whether for income, residency, or long-term wealth, get in touch with our team, and Dream Homes Investment will be happy to guide you.